What's up, guys? It's September 11th, 2024. I had a pretty interesting day in the markets, man. We had a sell off and a great rally for the bulls. We talk about the daily chart, 45-minute chart, breakouts, leg count, and market cycle. This is the daily, this is the 45-minute. So we had that breakout, first pullback, gap bar below the EMA, bulls bought it. If we're asking how come this bar didn't get a second leg down, hold on. If we're asking how come this bar didn't get a second leg down, it did. It was implied right here. I was really impressed with the rally today. It took me a little bit longer to hold than I expected. But now we have a leg one pullback, leg two move into the EMA. More of this body right here is below the EMA. So is this a strong breakout above the EMA on the daily? I don't know. The context is good because we had a bull channel pullback, two-legged pullback. Oh, that sucks. Two-legged pullback, and then we rallied. Bears got a leg one, leg two. So that would create a double bottom. And we get today's price action. I had an expanding triangle. I thought that was really cool. So from here to here, expanding triangles are tough. The price action, I think, was hard these last couple of days because all these sells, this sell has the one I just pointed to. Okay, I can see the wedge bottom 23. This sell looks pretty strong, but then it rallies. Today's sell was strong. Look at the bar one, bar 9 has a gap. So many gap bars. Then we rallied. So we have a big down, a big up, big down, big up, big down, big up. The market's range bound with more bullish price action. I think it's pretty interesting. It's just, you would think a sell-off like this is strong, but if we're in a range, we've been in a range for a while now, then it's buy low, sell high. That's what's been happening. So let's talk about the bars and the breakouts, and then we'll go over the leg count today. Excuse me. So bar 1, breaking out below the EMA with follow through. Bar 2, I think this is strong enough to get its own follow through piece. Bar 3 is an implied pullback. 4, 5, 6, 7, 8, 9. Strong bear channel that gets a bear breakout, and this bar puts a gap there. So now one could even argue this is climactic in correlation to the previous bars. The previous bars are orderly and this bar is bigger. So it is climactic. But then bar 10 we get follow through. Bar 11, first trend line break. So we're in leg 2. So bar 9, so I'm saying bar 9 reset the count because we broke below yesterday's low. Bar 10, so leg 1. So leg 1, opposite bar breaks the trend line. Leg 2, 14 breaks this trend line. Leg 3, now we have a wedge bottom. This wedge bottom led to a really good rally inside bar 19. So we see how leg counting works. We have a breakout here below the EMA and gets follow through. So we break out the 5-minute EMA, break out the 45-minute EMA. We're breaking out below yesterday's low. So there's several breakout leg 1 moves today. If we count this as a breakout, we have a breakout, implied pullback, breakout, implied pullback, leg 2. And there's kind of a pullback here, but this really just breaks out. This leg 2 is kind of climactic. It was asymmetrical legs. We have to kind of ask ourselves what type of legs are these. I think today was a little bit climactic. I did hold short here and I got out for a loss because I thought we would get a double bottom. But at the end of the day, if you're short and you start to see bull bars collecting above the EMA, you have to get out because your premise could be wrong. I got out and reversed and it was okay. So that's the bear side. Strong bear legs. The price is expanding. We've been in an expanding triangle. We get a low of the day and then rip higher. Really interesting. These 4 bars, bull bars, 17, 18, 19, 20, 21. First pull back into the EMA. Give me 2 seconds. First pull back into the EMA. 21, bad follow through. 22, looks good for the bears. 24, okay, maybe the bears need a double top. 25, that double top kind of looks like it's happening, but there's a lot of bull pressure and there's a gap here. Why is there a bull gap under the EMA. If that's bear territory, and now you're telling me bears are getting trapped below the EMA. So we have to think a little bit about, we have to assess the strength of this leg. Maybe we don't see a new high at the day right now. We can't tell it's gonna be a new high, but what we do know is we might go more sideways, we might go up because this is strong enough. The bulls have done something to the day here with a 1, 2, 3, 4, 5 bar micro channel. And we're in a range was buy low, sell high. So that's a 5 bar micro channel at range lows. It gets its second leg here. So after the second leg, 26, we got a good breakout. 27 follow through, 28 bad follow through. The bars are shrinking. 29, 30 leg into the EMA. I actually got out on 30 because I thought it was going to reverse. So I had to buy again around here. I waited to see what would happen. And I made money for the rest of the day. So, you know, just following your rules is really important. So we bounce off the EMA. 31, good follow through. Bulls are trying to break out above the higher time frame EMA. 32, bad follow through. 33, 34, 35, 36. Another bull channel above the higher time frame EMA. When I trade, I think that resets the leg count. So I bought 36. My target was 2R or the recent high. I got out around this price action, and that was another 3 legs. So there's another 3 bar micro channel pullback. Bull bar micro channel pullback. Bull bar. Bull bars. So this is micro channel pullback. Micro channel pullback. Micro channel pullback. And all these micro channels have gaps. So we have to keep at every time a new micro channel gets added, we ask ourselves, is this strong enough for its own leg too? Yeah. Is this strong enough for its own leg too? Yeah. Is this strong enough for its own leg too? It is. But the more we go, the more we have to think like, how many legs is this? You know, after bar 30, there was a nice steady gap open. So that's good. That's good for the bulls. I'm gonna delete this line because I don't really trade with the lines there anymore. So from a leg counting perspective, breaking out leg 1, pull back leg 2, breaking out leg 1, opposite bar, leg 2, opposite bar, leg 3. I like to count opposite bars. I like to count trend line breaks. So we can go leg 1, 39 breaks the trend line. 33, leg 1, 39 breaks the trend line. Leg 2, 42 looks like a double bottom. But then look here. Look at this leg. We get another trend line break, leg 3. That's what I'm trying to get at. Leg 1, pull back, leg 2, pull back, leg 3. Breaking out above the high of the day. So now the leg count resets. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Strong trend got leg 4. Look at 78. It's climactic compared to these 3 bars. These 3, and there's a leg, the sell leg right there actually too. So that's a trend line break on a smaller time frame. But that's besides the point. The point is we have to keep reassessing. Each micro channel is strong enough for its own leg too. I think a lot of bears saw this leg lower and they were getting trapped. I was definitely a little bit confused around this price action. But once we started to clear legs here, I got long and it was an okay day. Yeah, just trying to stay consistent with the setups. I'm gonna talk about the leg count, where we are in the market cycle, and then I'll draw in the gaps. So leg counts. We kind of been talking about leg count. Leg count 1, trend line break, opposite bar. Leg count 2, trend line break, opposite bar. 3. And then you could even reset the count how I said with bar 9. Same concept, leg 1, pull back leg 2, pull back leg 3. And the market cycle, and then we have a bull leg, so now we're range bound here, and then we break out of that range, break out the EMA 26, 27, 28. Market cycle resets, leg 1, pull back leg 2, breaking out of the higher time frame EMA, market cycle resets. So when this happened, I was drawing legs like this. I like to draw legs from trend line breaks perspective. I'm not doing it in any like, it has to be like this. It just has to help me frame the day. Here's another leg. This leg is strong enough for its own leg. Breaking a trend line. It's breaking about above the higher time frame EMA, so I draw another line. This is strong enough for its own leg. Draw another line. And these are all breaking the trend line. 54 breaks this trend line. Okay, we go sideways. Now we have a new rally. 64 breaks that trend line. Look, we go sideways. Okay, we have a new rally. 73 breaks this trend line. Pull back. Okay, look at this rally. Already broken, 77 broke the trend line from right here right away. A lot of legs, but I just showed you how I was counting it from a reset perspective. So you're not counting 1, 2, 3, 4, 5, 6, 7, 8. So you're not out here saying bulls have 8 legs. One more second. We're counting legs. Market cycle has to reset. So where are we in the market cycle? Market cycle, we were in a range bound price action yesterday here. Big down, big up, big bar one, market cycle resets. We get the opposite bar, we start channeling. Then bulls make money. So now we're range bound again here. Okay, we go range bound, we wait for the breakout. We get the breakout 26, 27, 28. Okay, market cycle resets. Second leg trap into the EMA for the bulls. This looks like it could be a sell. However, bulls get the breakout again. Okay, we're breaking out the EMA. Let me do the leg count reset. Leg count resets. Okay, we get to the high of the day. Now we're at fresh highs. Okay, I'm resetting the count. I'm not saying you gotta count like this. What I'm saying is you just gotta be cognizant of where the market is, where the leg count is, where the gaps are. Where are we in the market cycle? I like to trade breakouts, so I like to know if we're range bound, so I can wait for that breakout and catch the first leg, and then see how long I can ride it out. Today was tough. I bought bar 26, but I ended up getting out around here, thinking it was a double top because of the sell. We rallied, so then I bought 30. I got out around here, waited for more price action, bought 49. I went for 2R. I got a little more than 2R, but ultimately I got out around this price level, around 63, because these bars were channeling higher. I saw this bar race up and kind of sell sideways, so I wasn't willing to sit through a deep pullback in case something happened for the bears. And we were at new highs again, so I'm pretty sure that was very close to a leg 3 at new highs. Leg 1. Oh yeah, I had this like that. That is a micro leg, but that's more of a sideways leg. And I got stopped out right there. I was trailing my things. I got stopped out with profits. So leg counting's tight. I really like it. The way I like to trade is leg counting, market cycle, and gaps. We draw those gaps in now. Big gap, bar 1. Drop some comments. Let me know how you guys are doing. Are you guys trading gaps? Are you guys trading leg counts? Are you guys just looking for that initial swing and then calling it? I'm not saying the way I trade is the end all and be all. You know, I just want to, this is just how I trade. That's why I made the channel. These videos are a form of my review because I don't really like to mark up charts. I think it's better to talk about them. I do mark up charts though. Just because I don't like it doesn't mean I don't do it. I just prefer this. Okay. Yeah, so I've been studying Al for about a year, and then I got into Ali, really deep into Ali stuff. I'll disclose how deep later on, maybe next year, but right now I'm just staying focused with Ali's work. And I would suggest anyone starting out to take the same path. Take Al's course, learn the language, learn what a double bottom is, how they react. Bears are getting trapped, so double bottom, they buy back shorts, bulls buy the support. That causes a surge up. So what is a double bottom? What did I just mean by what did I just say? Okay. I'm just highlighting this so we don't lose our spot. Right here is a form of a double bottom. The bears that short 15, see the bears that short 15, 16, see 17, 18, and they get trapped. See the leg on 18? There's a tail. Excuse me. Let's go 1 minute. See this? So this is what we're talking about right here. Bears get short around bar 15, 16 was here. And they wait for price to come up. They get short again and they get out here. So what price has done, bears get short. Price retraces their trap. They short higher. Now their price line's in the middle. They make a scalp on their second target. Make a break even on their first target. They buy back their shorts at their original entry. And bulls see support. And they understand the dynamics of a double bottom. I know that doesn't look like a double bottom, but on the other time frames it will be. Bulls understand the dynamics of a double bottom, and they buy low, and that's bears buying lows, and that's bulls buying lows, causing the buying pressure. Will it cause a rally like today every time? No. I was taken back by today's rally, but you guys get the idea, and it's the same thing for double tops. That's how a double top is. A bull buys a double top. a bull buys the first top thinking it's going to break out. The bull gets trapped. He sees a retracement. He buys lower. He waits for the price to retest his original entry. He makes a scalp on his second entry. He gets out break even on his first entry, so he makes a point. Double top, double bottom. All right, guys. Spilled over a little more than 10 minutes, but yeah, let me know what you guys think of these breakdowns. I know every couple of months I kind of change the angle of them. I tried to do bar by bar, but it just doesn't serve me as strong as talking about breakouts like counter market cycle will. You guys have a good one. If you guys learned something, share the show. Don't be a hoe. I copied Andy Frisella with that. I didn't come up with that myself. I'm going to be saying that more often. You guys have a good one. I'll talk to you later. Thank you for your support. Thank you for the questions. I appreciate everyone here. Thank you again. Bye.